Do you want to learn how to build a dividend-paying long-term stock portfolio targeting for the next 5 years? Watch this video until the end to understand one of my long-term stock selection strategies and to know the dividend-paying growth and value stocks in my portfolio. When a company declares that it has earned profits, it may give you a share of its earnings in proportion to the number of shares you hold. This is called dividends. For example, a company may declare a dividend of rupees 10 per share for a specific period. If you held 5,000 shares in that time frame, you would receive rupees 50,000 as dividends. Good dividends are not just bonus in addition to stock returns. They also accumulate to become sizable in the long run. Dividend-paying stocks are also the darlings for institutional investors, and much big money comes in as the company grows. These dividend stocks provide a cushion against volatility and generate regular tax-free income to a certain extent. You can determine which stocks pay dividends by researching financial news sites. It's nothing difficult in these days. You may see top dividend-paying stocks, but this should not be the only reason why you are picking a stock. At times, companies have also given dividends when they have been churning losses. There are a host of other factors you need to look at, like profit history, sales growth, cash flows, business outreach, debt conditions, management quality, etc. So here I present my research on identifying not only the dividend paying stocks, but also filtered out further to evaluate their capabilities to continue paying dividends in the long run. My criteria for shortlisting such stocks are market cap greater than 618 crores, dividend payout ratio of less than 31.2%, stocks with a current dividend yield of more than 3%, stocks with sustained per share dividend and amount over the past 5 years, and their business model and continuity plan based on annual reports and management investors presentations. Please like the video. If you are new to my channel and looking for fresh content on stock markets, please do subscribe to my channel and hit the bell icon. Click on the top right corner link to understand types of stocks such as growth stocks or value stocks. Let us take up stock number 1. This company has a market cap of 8,562 crores. Share price at rupees 577. 52 weeks high and low are rupees 846 and 365 respectively. Stock PE at 6.8. Stock is trading at 0.78 times its book value. Promoters holding at 50%. FIIs, DIIs and mutual funds also hold significant stakes. Price to earnings to growth ratio, that is PEG, at 0.21. Here PEG is a valuation metric for determining the relative trade-off between the price of the stock, the earnings generated per share, that is EPS, and the company's expected growth. In general, the PE ratio is higher for a company with a higher growth rate. Thus, using just the PE ratio would make high growth companies appear overvalued relative to others. PEG less than 1 is desired. This company's earning yield at 13.8%. Earning yield, which is inverse of the PE ratio, shows the percentage of a company's earnings per share. Earnings yield at above 10% is excellent for an investor. The dividend paid by this company is at rupees 20 per share. The dividend yield of this company is at 3.1%. It shows how much a company pays out in dividends each year relative to its stock price. Dividend payout ratio at 20.4%. It is the amount of dividend paid to shareholders in relation to the total amount of net income generated by the company. I categorize this company as a dividend paying growth stock. The company name is CESC Limited. CESC is India's first fully integrated electrical utility company, having an epic ride ever since 1899 in generating and distributing power in Kolkata and Howrah. They have private participation in the generation, transmission and distribution of electrical power. They are the sole distributor of electricity within the area of Kolkata and Howrah and serve 2.9 million customers, which include domestic, industrial and commercial users. They own and operate 3 thermal power plants generating 1125 megawatt of power. And CESC also have huge investments planned in smart grids with renewable generation. Let's move on to stock number 2. This company has a market cap of rupees 763 crores. Share price at rupees 393. 52 weeks high and low are rupees 491 and 186 respectively. Stock PE at 5.8. Stock is trading at 0.98 times its book value. Promoter shareholding at 45.2%. FIIs, DIIs and mutual funds also holding significant stakes. Price per earnings to growth ratio, that is PEG, at 0.22. Earnings yield at 18.4%. Dividend paid by this company at rupees 15 per share. Dividend yield at 3.8%. Dividend payout ratio is at 25.7%. I categorize it as a dividend paying growth stock. The company name is Cosmo Films Limited. Cosmo Films Limited is a global leader in specialty films that are used for flexible packaging, lamination, labeling and industrial applications. It is engaged in the production of flexible packaging films. Company's product majorly comprises of BOPP films, thermal films and coated films. Let me know your opinion on this company in the comments section. Let's get into stock number 3. This company has a market cap of 80,789 crores. Share price at rupees 81.6. 52 weeks high and low are 125 and 73.2 rupees respectively. Stock PE at 6.84. Stock is trading at 0.68 times its book value. Promoter shareholding at 51%. Price per earnings to growth ratio, that is PEG, at 5.3. Earnings yield at 8.6%. Dividend paid by this company is at rupees 3.2 per share. Dividend yield at 3.6%. Dividend payout ratio at 26.9%. I categorize this stock as a dividend paying value stock. The company's name is NTPC. NTPC Limited, formerly known as National Thermal Power Corporation Limited, is an Indian public sector undertaking engaged in the business of generation of electricity and allied activities and is promoted by the Government of India. NTPC's core business is the generation and sale of electricity to state-owned power distribution companies and state electricity boards in India. The company also undertakes consultancy and turnkey project contracts that involve engineering, project management, construction management, and operation and management of power plants. NTPC is taking various steps to make its energy portfolio greener by adding significant capacities of renewable energy sources. So definitely the future is for the renewable energy and NTPC is stepping into this segment. Let's move on to stock number 4. This company has a market cap of rupees 1081 crores. Share price at rupees 282. 52 weeks high and low are rupees 570 and rupees 235 respectively. Stock PE at 15.3. Stock is trading at 0.93 times its book value. Promoter shareholding at 59.7%. Price per earnings to growth ratio, that is PEG, at 0.68. Earnings yield at 23.5%. Dividend paid by this company at rupees 9.5 per share. Dividend yield at 3.3%. Dividend payout ratio at 26.9%. I categorize this stock as a dividend paying growth stock. The company's name is Upper Industries Limited. Upper Industries is one of the best established companies in India operating in the diverse fields of electrical and metallurgical engineering. It manufactures aluminum conductors for power transmission and telecom cables. The company also manufactures polymers, synthetic rubbers, latex, transformer oils, pharmaceutical oils, and other specialty oils. Let's move on to stock number 5. This company has a market cap of rupees 4087 crores. The share price at rupees 311. 52 weeks high and low are rupees 492 and rupees 209 respectively. Stock PE at 7.4. Stock is trading at 1.1 times its book value. Promoter shareholding at 72.9%. Price per earnings to growth ratio, that is PEG, at 0.29. Earnings yield at 38.5%. Dividend paid by this company at rupees 16.6 per share. Dividend yield at 5.4%. Dividend payout ratio at 30.6%. I categorize this stock as a dividend paying growth stock. The company name is Cochin Shipyard Limited. Cochin Shipyard Limited is the largest shipbuilding and maintenance facility in India. It is a part of a line of marine related facilities in the port city of Kochi in the state of Kerala, India. Of the services provided by the shipyard are building platforms, supply vessels and double-hulled oil tankers. The shipyard has an order book of over rupees 14,000 crores and recently expanded its capacity. Let me know your opinion on this company in the comment section. Let's move on to stock number 6. The company has a market cap of rupees 579 crores. Share price at rupees 249. 52 weeks high and low are rupees 282 and rupees 132 respectively. Stock PE at 7.95. Stock is trading at 0.41 times its book value. Promoter shareholding at 60.7%. Price per earnings to growth ratio, that is PEG, at 0.21. Earnings yield at 19.8%. Dividend paid by this company at rupees 10 per share. Dividend yield at 4%. Dividend payout ratio at 28.5%. I categorize this stock as a dividend paying growth stock. The company name is Garware Polyester. Garware Polyester Limited was co-promoted by the chairman and managing director Mr. S.B. Garware in the year 1957, along with the founder chairman late Padma Bhushan Dr. Bal Chandra Garware. The company has developed in-house technology for polyester films in India and put its first state-of-art plant to manufacture polyester films in the year 1976 at Aurangabad in Maharashtra state, India, which was the first plant of its kind in Southeast Asia. The company is the only one of its kinds to manufacture its own raw material, that is polyester chips, to manufacture polyester films for a variety of end applications such as packaging, electrical and motor and cable installations. Let's move on to stock number 7. This company has a market cap of rupees 718 crores. The share price at rupees 104. 52 weeks high and low are rupees 199 and rupees 85 respectively. Stock PE at 21.2. Stock is trading at 0.42 times its book value. Promoter shareholding at 35.32% and institutions holding more than 30% stake. Earnings yield at 9.09%. Dividend paid by this company at rupees 6 per share. Dividend yield at 5.8%. Dividend payout ratio at 30.1%. I categorize this stock as a dividend paying growth stock. The company name is Tamil Nadu Newsprint and Papers Limited. Established by the government of Tamil Nadu. It manufactures newsprint, printing and writing paper. The company also owns and operates a wind power farm which is used primarily for captive consumption. Tamil Nadu Newsprint manufactures eco-friendly papers by adopting innovative technologies for sustainable development. It is also holding several patents in this technology. Let's move on to stock number 8. This company has a market cap of rupees 1986 crores. Share price of rupees 62.1. 52 weeks high and low are rupees 103 and rupees 39.8 respectively. Stock PE at 5.47. Stock is trading at 0.29 times its book value. Promoter shareholding at 63.3%. Price per earnings to growth ratio, that is PEG, 0.12. Earnings yield at 13.6%. Dividend paid by this company is at rupees 2 per share. Dividend yield at 3.2%. Dividend payout ratio at 11.5%. I categorize this stock as a dividend paying growth stock. The company name is Jindal Saw Limited. Jindal Saw Limited manufactures cold rolled steel strips, line pipes, arc welded submersible pipes and seamless tubes of stainless steel, ball bearing and alloy steel. It is a leading global manufacturer and supplier of iron and steel pipes and pellets, having manufacturing facilities in India. It has high stakes in the national pipeline projects. Let me know your opinion on this company in the comment section. Let's move on to stock number 9. This company has a market cap of rupees 21,942 crores. Share price at rupees 90. 52 weeks high and low are rupees 122 and rupees 56 respectively. Stock PE at 13.2. Stock is trading at 2.1 times its book value. Promoter shareholding at 51.1%. Price per earnings to growth ratio, that is PEG, at 1.49. Earnings yield at 10.9%. Dividend paid by this company at rupees 2.8 per share. Dividend yield at 3.1%. Dividend payout ratio at 27.4%. And many other intangible factors that are attractive. I categorize this stock as a dividend paying value stock. The company name is Bharat Electronics. Bharat Electronics Limited, BEL, is an Indian state-owned aerospace and defense company with about 9 factories and several regional offices in India. It is owned by the Indian government and primarily manufactures advanced electronic products for Indian armed forces. It produces a wide range of state-of-the-art equipment in fields such as defense communication, radars, naval systems, C4I systems, weapon systems, homeland security, telecom and broadcast systems, electronic warfare, tank electronics, electro-optics, professional electronic components and solar photovoltaic systems. Bharat Electronics also provides turnkey system solutions. Civilian products from BEL include electronic voting machines, tablet PC, solar power traffic signal systems and access control systems. Now let's focus on stock number 10. The company has a market cap of rupees 1552 crores. Share price at rupees 89. 52 weeks high and low are rupees 141 and rupees 62 respectively. Stock PE at 4.46. Stock is trading at 0.64 times its book value. Promoter shareholding at 51.1%. Price per earnings to growth ratio, that is PEG, at 0.04. Earnings yield at 20.2%. Dividend paid by this company at rupees 4 per share. Dividend yield at 4.4%. Dividend payout ratio at 15%. I categorize this stock as a dividend paying growth stock. The company name is JK Paper. JK Paper Limited manufactures and distributes copier paper, cover papers, plain paper, white and color poster paper and paper related products. It is the India's largest producer of branded papers and a leading player in coated papers and high-end packaging boards. Most of the export-oriented companies have gave orders to JK Paper. In conclusion, this portfolio has 2 value stocks and 8 growth stocks. I have presented one of my portfolios here. This is a dividend paying growth portfolio having a cushion of a couple of value stocks. Happy investing. Thanks for watching. Don't forget to like the video and subscribe to the channel. I will see you again in the next video. Until then, take care of yourself and your investments.